Welcome to this YouTube channel on how to buy businesses no cash down. I'm Carl Allen and I've been buying businesses for almost 25 years, more than 250 deals in 17 countries. This playlist is all about deal specification. So what type of business do you want to buy? The sector, location, the size of the deal, your desired role in the business, and how you bring your passion, your business skills and experiences to bear. Here's the next video in the sequence. There are 5 in total.
Now remember this slide from the original webinar. Once you acquire a business, whether you bolt others into it or not, grooming it for sale by systematizing it and then making it irresistible to others will jack up your exit multiple. And just to remind you, some businesses do sell for crazy multiples because they are so highly coveted by the wider market, and when you snap at a competitor's heels, it'll just take you out for a big number. Microsoft paid 82 times EBITDA profit for Skype. I've paid 44 times in the past for Mercury Interactive when I was at HP, and Johnson & Johnson got tired of a McLaren eating its lunch and took them out for 63 times operating profit or EBITDA. The Facebook WhatsApp deal defies all logical thinking, but 1,000 times the profit was very nice for the founders. I'd love you to get 1000x as a multiple for your business eventually, but chances are it's not going to happen. A dismal 5x for now will still put you in the 0.2% bracket. And finally, let's quickly look at how we translate this back to the current size of business for you to target. This will be calculated in terms of annual sales revenues currently, and as you recall, this is one of the 2 important filters we apply to all the opportunities originated over the next few weeks. The first data point that you need is the average profit margin for your particular niche. You may already know this, however, if not, you need to find out. If you're working for a business in the niche already, go get a copy of your business's latest accounts and look for the operating profit or the EBITDA number. This is the profit from normal operations, so it's pre-tax and before the deduction of any interest or depreciation charges. Now in this example, the average EBITDA margin is 15%. So divide this into the profit number, so $800,000 divided by 0.15 or 15%, and you have 5.333 million. That's the size of the business you need at the time you want to sell it, and in our case here it's at the end of 2017, so just under 3 years. If you can't get any accounts, you'll need to do some research online. Later in the training we'll look at specific online databases for financial information like Doodle, Manta, Hoovers, etc. But since this analysis is just to give you an initial steer for your wealth creation plan and the definition of the approximate size filter, we only need an approximate number. One very quick way you can do this is go and look at the operating profit numbers for public companies. So pick several publicly traded businesses that do something similar to your optimal expertise passion combination. Let's assume you're looking at the IT hardware sector, so let's take Cisco. Now you can find this data on hundreds of free sites, but I often use Yahoo Finance. It's free and it's got lots and lots of great data. So type Cisco in the search bar and you'll see this snapshot. Now down at the bottom left side of the screen you'll see a section for financials. So click on the income statement and that will tell you the operating profit. So you'll need to calculate the margin percentage of EBITDA or operating profit to sales revenue. So in Cisco's case, take the $9.345 billion of operating income or profit number for 2014. That's the latest published full set of accounts. Then divide it into the total sales number, which is 47.142 billion. So if you do the math, that's 19.8%. Now if you do this for several public companies in your niche, then take an average. That will be more than good enough for this exercise. When we do get into the financial modules in week 4, we'll go into this in much more detail. Now before we leave this exercise, just out of curiosity, let's calculate Cisco's valuation as a profit multiple. We've talked about 5x as being a very conservative place to start. Let's see where Cisco are. You'll see here that Yahoo kindly gives us Cisco's PE or price earnings ratio, 16.96, for valuing the business. Now that's great for a public company, but it's not the way that private companies are valued. We use operating profit, the EBITD number. Now you'll see that Cisco's market valuation is just under $149 billion. Now ordinarily there are some adjustments that we need to do to this number, and we'll cover that later, but for now, as a proxy, let's calculate what that $149 billion value is as a multiple of Cisco's operating profit. So if we take the 149 billion market cap or value, which is the share price multiplied by the total number of issued shares, and divide it by the $9.345 billion current annual operating profit, the multiple is 15.9x, so way more than 5x. Obviously, Cisco's a great company and that's reflected in its public valuation, but it just goes to show how you are regarded by your industry goes a long way in setting your valuation multiple. So I just wanted to give you that flavour for now, and as I said, we'll go much deeper into valuation and financial analysis later in the course. So returning back to our size filter for the wealth creation plan, we ended up with a $5.333 million revenue number in 3 years from now. So the final step is to translate that back to today's numbers. Now you may want to be conservative and apply no growth whatsoever until you know exactly what your target business looks like. However, in this example, the business was in IT storage software for small businesses, and the acquirer was very confident of a 33% total growth over the 3-year period. So that translated back to $4 million today, was just the 5.333 million divided by 1.33. So that's it for this module. Next, I want you to watch the financial planning module for the existing business owner, since if this is your first business, you will see how a bolt-on acquisition can turbocharge your wealth creation plan.
So that's it for this particular video. The next video in this playlist will follow, and please check out all the other playlists and videos for everything you need to know to learn how to buy a business no cash down. In fact, I've crammed everything that you need to know into a special 90-minute webinar titled 3 Insider Secrets to Buy a Profitable Business Inside of 99 Days Without Cash or Knowing How to Run a Business. And here are the 3 big secrets, the 3 killer training topics. Think of these as hurdles to you becoming a business owner. First, I'll show you exactly what the 10 steps are to buy a business, and you must follow these in order. It's really critical. Second, I'll show you lots of case studies of deals structured using OPM, other people's money, and it's no more difficult than high school math. And finally, I'll show you how you can get others to operate the businesses for you, so you can do other things like spend time with your family or buy other businesses whilst enjoying the cash flow that your new business is generating for you. So to register for this groundbreaking training, just click on the link underneath this video on YouTube or type in this link into your browser. It's bit.ly/buy-my-business. And I'll see you on air sometime in the next week. Until then, bye for now.